All right, ladies and gentlemen, welcome back to the channel. Today is the Super Bowl of econ nerds like myself. Market strategists and equity investors alike need to hear this information. Jerome Powell just hit it with the Brady. Okay, he Jerome Brady'd this thing as best as he possibly could, delivered us a 50 basis point rate cut. We actually did get the first descent in this entire cycle. We haven't seen a descent in a long time, since 2019, okay? So today's pretty historical in that regard. Now, equities are mixed and very volatile. I will share my perspective of what's coming next for stocks in this video as well. And ladies and gentlemen, first thing you need to know is 50 basis points is more like a panic cut than adjusting policy, okay? The Fed doing 50 basis points is inherently saying they are somewhat behind the curve. And that's where some of this bearishness comes in, where some people are like, 50 basis points, how could that possibly be negative? Well, because the Fed is basically admitting they were too slow and they want to kind of get ahead of some weakness that we are going to see. Now, in the dot plot that came out today, I covered that as well in the last video. You did get the Fed that is projecting 10 rate cuts, so about 200 basis points of easing over the next year, throughout 2025. So the Fed did confirm that this is not just one cut and we'll wait and see what inflation's going to do, but this is one cut and the start of a new cutting cycle that is underway. Now, when I tell you Jerome Powell Brady'd this thing, I mean Jerome Powell gave us a bearish 50 basis point cut. Let's be honest, 50 basis points is not bullish in the sense of where the economy is going next. The Fed doesn't cut 50 basis points when things are fine, okay? The Fed cuts 50 basis points versus 25 when things are not fine. So from that standpoint, that's bearish. What does the Fed see that we don't? But Jerome Powell, he was about as bullish on the press conference as you could possibly be. It's clear the script said, we're going to cut 50 basis points, but Jerome Powell, you're going to be as bullish as you possibly can. And he reiterated this in many quotes during the conference. In fact, the last question that Powell was asked was about this dual mandate. And Powell has said the risks are balanced. Well, this individual asked Powell if he's more concerned about the labor market than inflation, considering the labor market's starting to roll over. Monetary policy tends to work with long and variable lags, something we have heard for many years now. And he says, yes, I think the risks are roughly balanced, which this is the Brady aspect of Jerome Powell today. We know damn well Powell does not think, like internally with himself, that the risks are balanced at this point. Jerome Powell knows damn well the risk is that the economy slows down too much. But he still said that the risks are balanced. Basically, if Powell would have said there's more risk to the labor market than inflation, you probably would have seen a much sharper sell-off based on that, because that's basically saying the Fed's worried. Now, there was talk on housing inflation. Jerome Powell was asked if he can even return inflation at 2% with housing where it is. And Jerome Powell said they're basically looking at market rents right now. And as long as those stay where they are, continue to come in low, then inflation will eventually come down to 2%. That it's just taking time for leases to roll over and those new market rents to be reflected in the inflation data. The bigger market moving headlines to the downside was just the simple question that was asked to Powell. Powell was asked, is the Fed declaring victory on inflation with, again, a 50 basis point cut, which is leaning more towards, hey, we want to accommodate the economy and the labor market, not so much fight inflation anymore. And Jerome Powell said very quickly, he said no. Another negative headline that we got was Jerome Powell that said we are probably not going back to a negative neutral rate, but we are going to find out. Like, okay, I hope that's not too painful if we find that out. Because inflation is really just a barometer of economic activity when you want to boil it down more than anything else. When you have high inflation, you have a strong economy. That's why the Fed is, as they said today, they were trying to cool down the economy to bring down inflation. You don't cool down an economy in a low inflationary environment because the economy must not be that hot if inflation is low. Another more negative headline was Jerome Powell that said that further job openings declines will start to reflect more unemployment. And the markets fell a bit on this because if job openings decline further, then that's going to start to have a negative impact to the unemployment rate. Now, we've seen that with the last job openings report. Job openings fell more than expected. So from that narrative, potentially the unemployment rate might start to rise more rapidly. Really, besides those comments, everything else was bullish or positive. Jerome Powell really did his best to come off as positive as he possibly can. Like Jerome Powell that says 4.2% unemployment is a very healthy labor market. Jerome Powell says the downside risks to the labor market have increased. We are in a good position to react. Jerome Powell says that we don't think we need to see further loosening in the labor market. We are trying to restore price stability without a period of pain. Jerome Powell said over and over again that the economy is in a good place, really trying to reaffirm that the Fed is not panicking, cutting 50 basis points because there's a problem out there, but the Fed is cutting 50 basis points because of the progress made on inflation and the risks changing from the inflation side to the unemployment side. What's actually very fascinating about all of this is the rise you initially seen with TLT and then the fall. Now, TLT is the long end of the curve, right? The 20-year Treasury bond ETF. Now, even though the Fed is expecting many cuts over the next 2 years or so, this is the markets telling you there is a concern about inflation, because if markets were concerned that this 50 basis point cut meant that the economy is, weakening rapidly, you would expect TLT actually to go higher on that. TLT actually falling means that markets may be concerned about too many cuts from the Fed igniting inflation risks, which then could cause the Fed to either hold rates where they are for a long period of time or actually see that, double surge like you've seen in the, 70s, 80s of inflation again. So TLT is actually very fascinating, and we'll talk about this more over the next couple of days to see where things really settle out. But this is on the alarming side, I would say. Jerome Powell was also asked more specifically about the labor market, if there are signs that the labor market may weaken faster in coming months. And he says the level of those conditions are close to maximum employment. Job creation has moved down in the last few months. The labor market bears close watching. And Jerome Powell defended the Fed, saying they are not behind the curve on the economy of, bringing down rates multiple times. He says we have been very patient in cutting rates, and referenced other central banks that have already cut rates before the Fed, saying that's kind of a sign that they're not behind the curve. Now, Jerome Powell also said, which I found very bullish, Jerome Powell said that the market should take this 50 basis point cut as a sign that the Fed is confident inflation is no longer a problem or not the main issue, but also should find confidence that the Fed will engineer a soft landing, or will do everything they can to essentially engineer a soft landing, which the markets did like those comments a lot. Jerome Powell was asked how close was this decision between 25 and 50 basis points. He says, I think we had a good discussion. I talked about this at the Jackson Hole and left the size of the cut open on purpose. He said, quote, there was broad support for this cut. Quote, look at the S&P. Everyone expects more cuts. He says there was lots of common ground, and we are going to take this meeting by meeting. He says this is a sign of confidence in inflation coming down, and quote, the logic is clear from a risk management standpoint. Basically saying from a risk management standpoint, it makes sense to go a little bit bigger this meeting rather than go smaller and risk unnecessary harm in the labor market. Jerome Powell also referenced, I believe twice, of the jobs numbers that they're getting, and that they're not really accurate, that the big revisions are making the initial numbers look a lot better than they actually are. And that's another reason to support this 50 basis point cut, because we don't really have a good picture of the labor market in real time. And that's why the Fed is focusing more on the unemployment rate rather than just the monthly headline numbers. As you can see here, markets are selling off at least a little bit, down about 0.3% on the S&P here today, after initially rising almost 1% on the S&P 500 after this Fed report came out. I think the issue here is why you are seeing a sell the news event is because 50 basis points is spooky to markets. The last time that happened was 2007, and the time before that was 2001. We went into a recession both times, and stocks did not do well for many years, okay? So there's that historical precedence there, but we also rallied 7 green days in a row heading into today. I think even if we got a 25 basis point cut, you probably would have still seen a sell the news event. You also have to consider that this 2-week period in September, the back half of September, is the worst 2-week period for markets of any time of any year. That's problematic. You also have earnings expectations that are very high, that are very much not pricing in a recession. At the same time, the Fed just cut rates 50 basis points, which is kind of a recessionary signal in and of itself. You also have the election coming up, which that is not currently being priced into markets. And now that the first Fed cut is out of the way and we're in this new Fed regime, markets might start to look forward to the election and price in some of that risk, whether it's higher tariffs or higher corporate tax rates. Both parties have negative implications for the economy and or the stock market, okay? So some of that risk could start to get priced in now after the first Fed cut. And the last reason why you're getting some of this sell the news is 10-year treasury yields, which I did not expect this to happen, are actually trading higher after this 50 basis point cut. 10-year treasury yields are up 3.71%. Up to 3.71% today, up 7 basis points, which is a pretty dang large move higher after a 50 basis point cut. And again, it comes down to what I mentioned previously. You have TLT that is trading lower today on some concerns that federal funds rates are not going to be super low 10, 20 years from now, right? That maybe the Fed's going to cut too much, maybe it's going to spark inflation, or maybe the markets are just overall a little too ahead of themselves on how many cuts we will get longer term. Now, also in the summary of economic projections today, the longer run neutral rate did get projected a little bit higher from June, from 2.8% to 2.9%, and that could be affecting TLT as well a little bit today. Now, if you have not seen the dot plot so far, I'll give you the simple rundown. GDP expectations stayed the same at 2% for 2025. 2024 GDP was revised down from 2.1% to 2%. Still, this is actually seen as pretty good. The unemployment rate by the end of this year, the Fed is projecting 4.4%. They're also expecting an unemployment rate in 2025 at 4.4% from previously expecting 4.2%. So slightly higher unemployment next year, higher unemployment for this year. PCE coming down to 2.1% from their prior estimate of 2.3%, and core PCE coming down to 2.2% from their prior estimate of 2.3%. Now, the federal funds rate is projected at 3.4% by the end of 2025 and 4.4% by the end of 2024. So again, the Fed's basically projecting the Fed to cut rates at every Fed meeting from now until the end of this year, and basically every Fed meeting in 2025. So we really didn't get any big surprises there either. What do I think this means for equities broadly speaking? Well, first off, again, I expected a sell the news event regardless of how this thing goes. 50 basis points, you were more likely to get a sell the news event. You were more likely to get a larger sell the news event because of the historical precedence around 50 basis points and the fact that we've priced in so much good news already. Again, 7 green days in a row today would have made 8 for the S&P. You're pretty well already priced for perfection. So I do think this means in the short term, equities probably get that seasonal September, October correction. But whether or not this turns into, the Fed was right to cut 50 basis points to avert economic damage, or the Fed was panicking and cutting 50 basis points, right? Looking back, let's say by the end of this year or so, and whether or not markets are in a good place or bad place by then will come down to economic data over the next coming weeks and months, okay? Each and every single piece of economic data will be heavily scrutinized by the markets, and we're going to be a little bit jittery and jumpy over the next couple of weeks. And that's the simple fact of the matter. And really over the next couple of months, you're going to be jittery around economic data because did the Fed, again, cut rates at the right time? Did the Fed cut rates because the economy is going to weaken a lot more? We don't know that as of right now. And the markets are going to be on recession watch from this point on. Now, let's say we get past the election to November, December, and the economy's still holding up, and we get another rate cut and things look good, then I think you're going to see a very aggressive end of the year rally. But it's hard to make the bullish case in the very near term for markets. But I can also make a very strong argument that Jerome Powell was very dovish, very bullish, if you will. He didn't give, he refused to give you any signs that this cut was out of panic, which from that perspective, you could see how markets could, in the very near term, be excited about this, where small caps and interest rate sensitives and cyclicals and value stocks could outperform. And you can make the argument that maybe big tech might get put on the back burner a little bit more here. But I do think overall there will be a sensitivity to economic data, even more so than what we have seen recently. And the stop clock is on for recession. And I think eventually there will be more recessionary fears and you will get that larger sell-off. But it's hard to say because we haven't seen a 50 basis point rate cut to start off a cutting cycle in 30, 40, 50 years. It's been a very, very long time. And if markets really want to hold on to that soft landing thesis and a 50 basis point cut as being positive, you could see certain areas of our markets react well to that. But I guess typical thinking would be from a trader's perspective, not necessarily investors, because 50 basis points is great as long as we avoid a recession. The more cuts, the better as long as we avoid a recession. But in the short term, from a trader's perspective, 7 green days in a row, 50 basis point cut historically, which is negative in the very short term. That's not great. Election year, right? The worst seasonal period for markets in any year is now. Like, there's very strong reason to expect a larger sell the news event. But 2024, after all the money printing, after being restrictive for so long, yes, we're still restrictive, but the Fed changing course, you could make a case that maybe certain areas of our markets could have a very strong, couple of weeks. But then again, I'm not confident enough to say that with any degree of certainty. You know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. You guys have a great rest of your day, and I will see you in the next one.